the informed investor. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
You got any questions about real estate? Charles Tarbey's your man, chairman of Century 21, joins us every Monday night. Evening to you.
Good evening, Steve.
A fairly gloomy piece on 60 Minutes last night by someone who is a good mate of mine, Tom Steinfort, who also happens to be a Richmond supporter. The piece said that basically we are facing a debt crisis. The property market and our entire economy are at risk as a result, and it's the tip of the iceberg. We're about to fall over a cliff. It's fairly emotional stuff.
It's pretty heavy. I saw it today, and I had a really close look. I wasn't sure about some of the commentators on it. I thought that they said that they reached out to all of the industry heads and nobody wanted to speak to them, but they managed to find a real estate agent in Granville in Sydney to comment. And I thought that was a bit odd because that chap made a claim that over foreclosures have increased by 600% in his area. And I thought, wow, how do you first of all find a comment like that? How do you know? How do you get your data on that? And it's very strong, very strong. And look, the marketplace is definitely going through a change. And you know that, I know that. Anybody who's been watching the news in the last 3 months would know that. But out of nowhere, a 40% drop and over the edge of a cliff, I think it's pretty harsh.
We've had these sort of doom and gloom predictions before. I remember there was that economist who claimed that the housing market was going to collapse and he would climb to the top of Mount Kosciuszko if it didn't. Of course, it didn't, and he was forced to climb to the top of Mount Kosciuszko because it didn't happen.
And the one who had to walk to Canberra,
yeah,
the same guy,
same character, yeah.
And then you have a chap out of the US who comes out here every year and does seminars and has been doing them for the last half dozen years that I can remember. And he called a crash of up to 50% of the market 4 or 5 years ago. And I guess if you listened, and I do know people that sold their properties because they believed what they heard, they would have lost a significant amount of capital growth. Look, there's no doubt that there's been heat in the market, and I'm an advocate for stories, negative stories about real estate, because there's been too much positive stuff. I'm an advocate for a balanced market, but to come out of nowhere in just this last week, when we all knew the market was changing, and talk about a 40% drop. That is pretty dramatic reporting, in my view. I don't know the gentleman who did the report, Steve. You do. I don't know, but I just feel that perhaps that might have been a little bit over the top.
What happened on the weekend in the auction space?
The clearance rates are still in the 50s, are in the 50s last week, they're at 55% this week. Interestingly enough, Canberra had a 68.1% clearance rate. So go figure. In one of these marketplaces, they had 79 auctions, but the two marketplaces that performed better than this time last year were Perth and Brisbane. So we've still got records being set compared to this time last year. Mind you, the Sydney market sat at a low in the 52s and Melbourne in the 57s. But still, the number of auctions that went up in Melbourne was 995 compared to over 1,100 last year, in Sydney 665. So the numbers have dropped, the percentages have dropped, but it's not doom and gloom. I can tell you, being in the marketplace where the credit squeeze was put on by Gough Whitlam, that's sadly how far back I go, and you couldn't borrow a cent to buy a refrigerator for 90 days. We're not in that kind of marketplace, and I think that people need to be a bit more responsible with their reporting.
Would you be better off at the moment being a buyer or a seller?
You've got a great opportunity as a buyer. As mentioned a number of times now, I think the market stopped its price climb before that last interest rate that we weren't expecting, which probably goes back about 2 years ago. And I feel that anything beyond 2 years ago probably went beyond boom prices. So I think people in the last 24 months who bought, if they're not selling, they don't have a problem. But if they bought for short-term investment, which is never a wise thing, they may have an issue with price. But I just think right now we're back to a balanced market where buyers have got the opportunity to look at more property. We've had an increase this week of 0.91% of stock coming on the market, which now takes it up to 9.77% of properties advertised this week, more than this time last year. So we've got a significant amount of property. We've got a lot fewer buyers. We've got banks putting downward pressure on lending. So at this point in time, if you're a buyer, you can actually look at 2 or 3 properties and take your time. You can take, your Uncle Louis through, the expert in real estate. You can take a friend through the following weekend and still not worry about losing a property. That's what's changed more than anything else.
Yeah, you don't have to rush around.
No, and that's not in every part of the market. There are parts of the market where you still have to rush. There are parts of the market in Sydney, Melbourne, Brisbane, where limited stock comes on, that's quality stock in certain areas, and people are still buying. There's no.
If you're selling, you need a decent agent, obviously, clearly, to do the hard work for you, because it is a harder market to get a sale in. Does that mean the agents got the upper hand when negotiating the percentage of their sale price?
I think so. In a boom market where discount groups came alive and so on, it's pretty easy to sell property. You literally got the hard part was getting the property for sale. The other part was getting a good auctioneer who could stand up in front of people, say a few words, and things would happen. Nowadays, you need a really good auctioneer and a really good agent to sit and negotiate.
So what sort of percentage should you be charging? Should they be charging you?
I think agents in some areas of the upper market in the eastern suburbs of Sydney particularly drop down to 1%, which is considerably low when you think about it. But I think a good fee out there right now. In country towns it gets higher, Steve, because property sits on the market for a very long time.
So somewhere between 1 and 1.5?
Oh, I think probably 1.5 to 2 and maybe a little bit more in some areas, Steve.
All right, Charles. Thank you, mate. I'll talk to you next week.
Thank you.
Charles Tarbey, Chairman of Century 21 Australasia. 21